Thank you for joining Wealth, Legacy, and Property. On this podcast, we leverage real estate to build wealth and leave a lasting legacy. My guest today is Roger Luri. Roger is a good friend of mine. He's also an author of Don't Buy Multifamily, Build It. He has been a real estate developer here in Chicago since the early 1990s. He has developed and built some great multifamily, townhomes, and even custom family and mixed-use units or properties here in Chicago. As a director on the board of a community bank focused on real estate, which was learning during the 2000s, Roger had a front row seat for the building haze and then the crash of 2008 to 2010. He has been able to see the firsthand which deals will survive under pressure and which deals would not. Thank you, Roger, for joining us today. How are you doing?
I'm great, Patrick. Thanks for having me.
So, Roger, I guess the first question I do have is, what was your number one lesson that you took away from all the experiences that you had during the market crash in 2008 that my viewer or my audience who may be a new investor or even a seasoned investor?
Well, that's a great question. And back in the 2000s, developer builders, a lot of people, it was a little different than it is now because a lot of the developers were like one-man show doing it, and they grew, kind of bootstrapped themselves up and started building bigger and bigger projects, and some of them got really big. Unfortunately, when the market dropped so much in 2008, a lot of those people just got wiped out because when you're doing it yourself and you're the only one in it, you've got every nickel into every deal. So listen, that I learned personally the hard way myself, because I was in a lot of deals up to my ears, is have partners. Don't go it alone. Having good partners allows you to be better capitalized and better able to ride out any kind of fluctuations in the market.
That do make sense because I guess in essence, it helps you spread out or stretch out your liabilities.
Right.
That way, in case of anything, it makes it easier to absorb any losses since you're not going to burden or all that losses. So think
about it for a second. Any investment you made, would any investment advisor tell you that it's a good idea to take every nickel you got and put it into one investment? That'd be crazy all the time. And so when you have a little investor group or investors that are well capitalized and they're putting in a portion of their investment capital into one deal and another, they can afford to take a certain amount of risk. Obviously, it's up to the principal that's running the deal to make sure that that risk is minimized and controlled and really understood. And that's the thing, being on the bank board and seeing all these deals when so many got into trouble, you see which ones will make it through that. And basically there are three things that make a difference. And number one, that you have to you start out with a reasonable loan to value or loan to cost on your deal. In other words, don't use too much leverage. Banks usually adjust how much they're willing to loan depending on market conditions, right? They don't loan as high a level as they used to right now, for example. But number two is that you need to be well enough capitalized. You need reserves. Somebody has to have and you find that, for example, a for sale deal like a condo project or a single family home, if you either do a fix and flip or you build a new home, either way, you're going to sell that home. And you have the option to rent it, which is great if that's an option that you've spelled out ahead of time, right? But those kind of deals, sometimes if renting it is not an option, you have to sell it at a loss if the market drops. Nobody knows what the market is going to do tomorrow. People will tell you they do, but they don't. Okay, so
Right.
everybody likes to talk like they know what's going to happen tomorrow, but none of us do, really. We wouldn't be here.
Right. Nobody has a crystal ball.
No. But the third thing, getting
Mhm.
back to it, is cash flow. So,
Sure.
and again, that's what happens. If you're the only person in the deal and everything is tied up in this one deal, you have no other cash flow coming in, then if the value drops and that deal goes down, then
Right.
how are you going to support yourself or your other deals? So some kind of cash flow coming from somewhere. And again, that can be your investors or things like that. You do a deal that's a rental deal and values drop, your lender gives you a hard time. They don't want to extend your loan or something like that. Well, if you have the capital to come in and cover that, it's not a problem, right? And then that deal, as long as it's a solid deal, it's going to come out, you're going to have cash flow, and it's going to work out well.
Right.
But if now there are people that their lenders don't want to renew their deal because now the numbers don't work as good if the rates have changed like that, right? And
Right.
so I went on, but you go ahead.
It makes a lot of sense. And actually, I do have a follow-up question, right? And we've had this conversation before. So you did touch on 2008, based on your experience, what you saw, right?
Yeah.
Do you still see that happening right now, especially with investors? Things have changed.
Again, that's a great question. And I already prefaced it by saying, I don't know what's going to happen tomorrow, right?
Right.
I don't kid myself into thinking that I do. So what I do is I try to follow the market trends, and I will make sure that I've taken those 3 steps that I've just talked about,
Right.
and that I'm going into a deal with good potential that I know I'm covered on the back end of it. And anytime you borrow money from a bank, people sign all the papers and everything, but you should read
Fine prints.
Read the document and see what you're signing.
Right.
They have in there what's going to happen if things don't go according to plan. And
Right.
you should understand that and make sure that you are prepared for all the what ifs.
Right.
That's kind of what it comes down to, right? But you're asking about the market now. So first of all, in Chicago, and the market is different everywhere, and even in Chicago, there are so many different markets right here. It varies quite a bit. For example, the high-end market, 2 million and up homes, the prices are still going up, and
Right.
And certain markets, especially in lower end, so much, right? Even going down, even here in Chicago. But
True, which was a very good reason, right? So
there always is a good reason.
True, but I guess for me, it goes back to the fundamentals, right? And I think you did touch on some of them, right? So for someone going for a high end, usually that person has taken at least 2 of the 3 recommendations you made earlier, right? Because they need to have some cash reserve. The numbers needs to make sense, right? So for me, and actually this is leading to another question that I want to ask, especially for a new investor. So let's say, for instance, net worth or individuals that a lot of money from their jobs, let's say they are W-2, or even if they have businesses and they want to venture into real estate. There is a lot of unknowns, right? Which you did touch on that when you start any real estate investment. If you start your real estate investment career, it always makes sense to start with partnership. It is something that a lot of people are not aware of. You have to learn that the hard way. I got to know you or meet you through networking events, and now we belong to this group, right? That's how we were able to build our friendship. So I guess tying it to what we've talked about so far, what advice will you give to a new investor who want to invest in real estate, whether it's high end, is hesitant and partner with someone? Because often enough, people have heard or read so much bad information, got so many bad information that they are hesitant to want to partner with somebody. What would be your recommendation or your advice to such an individual?
Oh, gee. There are books on such things.
Right.
Let me try and answer that and tie it back to what we were just talking about, because of us, a lot of times are people, they have a little more of an entrepreneurial
Right.
or something like that. But we have a tendency to do things that we shouldn't do. And, in real estate, I was just talking about the market here. Each individual area and market is completely different. And if you don't understand that market and know the nuance of that market, you got a lot of hard lessons to learn. And that's where you want to tie in with somebody who's already learned those lessons, because lessons, it's painful and often expensive thing to learn.
Yeah.
And it takes time. And that's what happens. So, you go buy an apartment building. Okay, I'll buy this investment. Well, your returns are probably not going to be great. Yeah, you'll make money over time. Do it right. But in order to really make good returns in real estate, you have to really understand the market and be able to make some moves and navigate your way through the market and, right properties, maybe do a value add, sell them at the right time, move into something else, go into more properties. So you have to be working in it. That's not your business. If you have another business, you should have somebody else doing it for you.
True.
And that they're easy enough to do once you meet the right people. That can be a great arrangement that works for everybody. A lot of us have issues, most of us are, hesitant of trusting someone else and getting involved in a relationship. You have to really get to know somebody, get to know the principal that you're thinking of working with, get to know them, look at the deals, let them explain the deals that they're working on, and get to know them over a period of time before you invest, that you're comfortable working with them and you're getting yourself into, right? That's really,
so in essence,
is going to be a fraction of the time it takes to understand the market well enough to invest yourself, right? Does that make sense?
It makes a lot of sense. So to wrap it up, or to summarize what we've talked about so far, starting off, just like in any area, you want to partner with somebody who has more experience, but to also help you feel comfortable investing your money or giving up your money and your resources. First, build that relationship with the person, right? Either you join a networking event or networking groups to get to know people, ask them questions, vet those people till you are comfortable with each individual, instead of you thinking, oh, I need to be in a hurry to invest. Because at the end of the day, the path is going to be the journey is going to be much longer for you than to spend more time getting to know the right people that you can work with, who can save you, let's say, 5, 10, or 20 years of your real estate career. I guess that's what I'm getting.
Right, absolutely right. And example, I've been in business for myself since I was 20, 21 years old or whatever, and I've made a lot of mistakes. Okay, I still do. But the biggest mistakes, I bet you looking back, is I didn't get people to do things for me that I either didn't want to do, or it wasn't my best talent. And people who are really successful, they spend their time doing the things that they do best. And the other things that they want, that they need done as part of their thing and that they want to get done, they have other people do them who are probably better at them, right? More experience and really like doing those things. And you're guilty of this. You always think I can do something better.
Right.
And you end up trying to micromanage everything. You're trying to do everything at once. And you can't do that. You only got so many hours. So you need to have people handling different jobs and focus on the things that you do best and let other people focus on the things they do best. And that's how you're going to get the most success. Make sense?
It makes a lot of sense. At the end of the day, delegate what you are not good at to those that are great at doing those things, so that you focus on your strengths that makes it easier for you to succeed. So I think we've touched on a few things so far. One of them is commercial real estate. We haven't explicitly in that. What I want to know is, as a new investor, wanting to get into commercial real estate, what would be your advice for such an individual?
The best way, I think, is to a market you're interested in, and
Okay.
try to some kind of a partnership with somebody who in that market and knows that market, and that
Okay.
is complement you and is going to be able to accomplish do what you want to accomplish. And what
Mhm.
you're a passive investor, which is the best way for most people who are business people
Right.
and are want to come into real estate and have to learn everything and do everything themselves,
Right.
is to be a
Right.
passive investor with somebody else that is in a market that you like and that you can understand. When you work with them a little bit, you start to understand what they're doing and you understand that market and you're comfortable with it, right?
Great. So I want us to switch gears right quick. Let's talk about Chicago. Now, as you know, both of us love Chicago so much. And usually when I have questions about specific areas in Chicago, you are the one I reach out to. I change it, right? And I know there was an article on LinkedIn a while back that was talking about migration, corporations moving around. And one of the factors happens to be one of the signs or the things that they look at is irrigation, water, right? Which I believe you did comment on it. So I want us to tie it to real estate market in Chicago. Which areas within the Chicago market are more attractive, that are growing, and why? Does irrigation has something to do with it, since the population of people in Chicago keep rising? Because often enough, people would complain, oh, you guys have a lot of taxes in Chicago, but why are people still coming into Chicago, and which areas are they towards within the Chicagoland area?
Again, that's a great question. And I want to try and tie that back to your prior question about what do I see the market going here.
Right.
But this question really ties in with that. This is something that I've talked about quite a bit, is this climate thing. And all over the world wants to think about climate change problem, but it's a very real thing that we've just seen in California, that where it wiped out some of the best areas there, the Malibu and the Palisades, all these $20 million properties that were just destroyed in one swoop. Disasters are becoming more and more common, and can't afford to just pump in money in to rebuild these things just to have them be wrecked again a couple of years later.
Right.
And what's going to happen is the insurance isn't going to cover it, and people won't go back in. They'll usually drop. People are going to move out, and you can already see in California, a lot of people are just not going to go back there. And some of them actually have friends from LA who just moved here right before the fire. So they're like, we're going to see more of this climate migration, and Chicago is is a place where we're going to see, and that's going to cause population growth. Well, guess what? We already have a housing shortage here in Chicago. So more people coming in is going to really bring it down. Now, yes, there are some here with taxes and administration and things like that, but this is a trend that's like a tsunami coming with this climate migration. It's as far as, the Architecture Center, I don't know if you're familiar with it. They had a big exhibit a year or two ago, and their prediction, after talking to all these people, was that the Chicago population was going to triple by 2050 from a few years ago. So over 30 years, they were expecting the population here to triple, which is like just the housing shortage here, and because of that, it's hard to imagine prices dropping too much here. Certain markets where there's a definite shortage, a higher market, that's been the case in Lincoln Park and surrounding areas. But so many other areas and many affordable areas, there just is demand for affordable housing here too. And so, and here in more affordable areas, there's a lot of demand there, that work. So that's what you do, right? You go find things that work, right?
Yes. It's interesting. And I know you do a lot of business within the city, right? Comparing the city to the right. So let's take, for instance, moving to the west side of Chicago and even into the western suburbs, which we talked about, we do see a lot of activities, right, moving in that direction, and some, right? So would you say that?
You mean people leaving the city because they're moving out to the suburbs, right?
Right, which I think it's one piece of it is young families, starting couples, starting families and stuff like that, based on how wanting more room and stuff like that. Some are forced to go into the suburbs, which I think we did talk before that. You said one of the changes that is happening is that people may not even be able to afford the suburbs because the suburbs are also getting expensive. So now the condos are going to be changed how we build them just to be able to accommodate smaller families and stuff like that. So I guess the question that I want to ask is the trend that you are seeing, is it affecting the suburbs more than the city, or it's almost the same?
Both. And of course, affordability is a problem no matter where you go, but the suburbs are more affordable in general than the city, right?
Okay.
And you're talking to people moving out, and I've been around for a minute, right? 68 now. In the 70s, you had a family and you had, you wanted to raise a family. A lot of times people would move to the suburbs.
Yes.
And one of the reasons was the schools.
Yes.
And affordability, right? Everybody, if they start a family, would want to move to the suburbs a lot of times. Well, then the schools improved in the 70s, 80s, and especially into the 90s and started staying in the city more and raising the families, right? But now it's very different. So most people can't afford a single family home unless they've got really strong income. And so the multifamily things, condos, there aren't a lot of townhomes because of the way our lots are divided here. But like that, sometimes not ideal for a family, but the bigger ones can accommodate a family. Ours has been, they've these neighborhoods, the side streets, mostly residential, single family only zoning. So the multifamily buildings generally have to go on the through streets, zoning for them, right? And in order to accommodate all these people coming in, they're going to have to make some changes to the zoning and allow, 2 and 3 and, maybe buildings on some of these side streets that have been designated just for single families. That's and they wonder why builders build all these expensive homes, but you don't have too many choices, right?
Do you see this change happening anytime soon with everything that we've talked about with the population in Chicago, especially the younger generation? Because as you stated, one of the reasons why people are also preferring the city is that the young folks usually, especially the young professionals, prefer to
live there,
be
right?
in the city.
Suburbs there's nothing for a young person to do, a single person there. So people to live in the city, and people want to be here because there's restaurants and so many things you can do. You can walk around. There's suburbs, can't. It's easier for a lot of people now to live in the suburbs because they don't have to commute every day like they used to do in the olden days before we had.
And I think maybe COVID also has a lot to do with that when we were forced to, work with stuff like that. So, we a few things, and our time with you is limited. So I want to use this as an opportunity to also talk about your book. I think is one of the best books I've read, real estate. It's to the point. It's a book that you can even finish reading in a day or two. So first, I guess instead of you talking through the book, I want to actually ask a few questions.
Okay.
As a new real estate, someone who is interested in real estate development, what would be your recommendation as to my approach towards that? Let's assume I've been able to start with building my team, right? Getting the experts. And also if you can touch on the individuals that I would need, because we've even talked about zoning. So obviously I'm going to need a general contractor. I'm going to also need an architect. So, can you walk us through how a new developer, let's say I just want to start with a 3 unit multifamily, 3 bedroom, already have the funds.
Just because of what we were just talking about too.
Exactly. And this we speak, I actually have people who are interested in doing that. So this question is actually for those individuals. Where should they start? What should they look for? How would they be successful in doing that?
Right. Well, again, grab my book, and as you said, it's a pretty easy read.
Right.
Long and drawn out, but in there, what I do is I kind of go process that you have to have in order to put together a deal. Okay, first I'm going to find my land, want to build, right? And so in order to do that, best to work with brokers who really know the area, right? And so they can do the best spot at the best price where you've got what you need there, right? And then, of course, you need to understand the zoning and what you can build there. And usually you do that with your architect, but it's good to have a good understanding of that yourself, and hopefully your broker has an understanding of that. And then you go forward with architect, they're going to tell you exactly what you can build and give you an idea how it's going to look, right? And I go into choosing the best architects to with. I go into that in the book because that's important, right? Then you develop a plan and figure out, well, how am I going to build this? And so you have a general contractor is going to build it, so you have to get the right contractor. And I talk about how to do that in the book, and how you want to find somebody who has been building similar properties, and you can see them and know what they've been building and know that they have the skills, they're going to be able to deliver the property that you want, and be able to more accurately and give you some numbers that make sense, right? Then going on to marketing and getting it to rental, or if they're condos, selling it, you have to have a whole marketing plan. So all these things you have to put in place ahead of time. And I kind of go the whole process step by step. But it's important as an investor, understand how the process is and see what's involved with it. But that doesn't mean you want to do all this stuff yourself. And for people, and I do say this in the book too, it's a point to give you the steps that you could, if you wanted to learn how to do it yourself. But more likely, even as an investor, that you understand what's involved, and that you can talk to your principal and the person who's going to be doing this for you and do in a partnership, that you know what to talk to them about. So it's well worth reading for investors to understand the process. And that's what the book is written for. It just really takes you through that process and the thought process and what you will be thinking about as you do this, right?
We talk about finding the land, which in essence, you also have to know the market, right? You need to find the right realtor who knows more about the market. As you also stated, you don't want to just rely on the expert's knowledge. You also have to have basic information to be able to ask the right question. So let's say I'm ready. Before I contact any realtor, I want to know whether this market will make sense for what I'm about to do, right? What are the signs that there is a likelihood of me succeeding in this area? I guess growth areas, right? In the book, you did touch on it a little bit. The need to watch out for to determine that.
Most important thing I talked before about, how you can't predict the market, but you follow the trends, right? You see the trends, and when you've been in business for a little while, which you have, you can see the trends. You see people building things and areas changing, right? Different areas are changing for different reasons, different people moving in and out. And so you follow that trend, right? And the most important thing when you're talking about building something new and or even doing rehabs and things like that, where you're doing a big value add and things, look at what other people are doing. And I make it very, very clear in the book. Don't be a pioneer, right? Pioneers, pioneers, you can recognize them because they're the ones who have the arrows in their back, right? You want to don't be the only one. Don't jump into an area and say, oh, this would be neat to do something here. But nobody else is doing anything nearby.
Okay.
Do something. You've got other builder developers doing things close by. You can be on the edge of that, but don't get way in front of it, because that's where you get hurt. You're going to get into a market, and especially if things soften in the market, right? And if lenders are hesitant to lend then when they see you're jumping the gun and moving into a market that's not established. They want to into areas that are the trend and things are happening.
Correct.
Right? They don't want to be pioneers either.
Why shouldn't I buy but build?
Well, that's the title of my book, and that's the premise. And I bought a rehabs, and I more my personal preference. I build things new, but you have to be better capitalized to do that, right? And building new construction, and I go through the numbers in the book, although some could be updated because they're a couple of years old, but it shows you the structure of how to go through the numbers. But when you build new, it's more of an equity play, because you don't have to pay for those first years. Go into like a minor bed, you can get in and you put in a little money and you start getting the rents up, and so you've got cash flow right off the bat if you're not going to gut the place and have it be empty during the construction period. But with new construction, there's always an equity play where your equity jumps up when that thing is completed. It's worth considerably more than the cost if you've done it right. Boom. So you get equity right off the bat, and then over time you're getting your income is going to be increasing. So generally you're looking for a big bump in that equity and a big return over the course of 3 years or maybe a little bit more, depending on the market, right? Same is true for value add type deals, right? And likewise, if you're doing a condo or a for sale single family that you do, then where you're making your money is when you sell it and you're finished. And so again, there's that equity. It's worth more money. That's your profit that you make, right?
Right. Would you recommend new construction?
I prefer new construction. I've done a lot of rehabs. Again, that's just a personal preference, but in rehabs, it's a lot of uncertainty. You get into it, and there's a lot of times people go in thinking, well, I'm only going to spend this much money and I'm going to fix it up, but then it ends up costing a lot more. You open it up, I have to put this in, I have to put that in, and by the time you're done, you end up spending a lot more on it than you thought.
Your best from I understand it's your preference, but for a new investor, will it make sense for the new investor to start looking into new development, or just going in to do the fix and flip, or the
it depends on the individual, right? And it depends on what they want to do, right? If you're going to be doing it yourself, you're going to be hands-on, and you're coming in with very little capital. Obviously, a small fix and flip is an easier thing to start, right? But if you're an investor that's pretty well capitalized, and somebody who can run the project for you, now investing into some new construction development may make sense. You get properties, you get if it's done the right way, right? So there's no one size fits all, but it depends on the investor and how well they're capitalized and who they're with to do it, right?
It goes back to the point we've touched on multiple times, right? When you are starting off, partnership, capital, or reserves, right? Having the right people, and cushion back on, or to be able to leverage not just the bank's money, but all the necessary resources that may be available to you. And if it's not available to you, you go out and seek for it. That leads to my next and maybe final question: syndication. As we know, we have to in syndication. What are some of the benefits of syndication? Does it even make sense? And who will it be best suited for?
Many different things. So sometimes it might be a developer who even only one or two equity partners, and they come together into and put an LLC and do the project. So you've got one person who's the managing member, and the other people are passive in the relationship.
Okay.
Then you have people who raise equity from smaller investors, and they got a bunch of small investors that put money into a deal and they fund it that way. And there can be funds where they just raise money and then they go looking for certain types of deals. You know, as an investor, I would go into something where we've targeted a specific deal, and I have a team going to do specific deals for me rather than a fund. But it's a different kind of investment, right? Again, the most important thing is, as from an investor standpoint, is to understand the going to be, in that project for you, right? Because that's ultimately what happens.
Right.
You know, I guess also just as an aside, as being a lender and on the bank board for so many years and looking at so many loans, I have hundreds, maybe in thousands of loans to look at. What the banks look at when they lend money is, yeah, they look at numbers. The numbers have to make sense and the market has to make sense. But the individuals is really what they scrutinize. Is this person likely to be able to finish this and make it happen, you know? And one of the biggest criteria when banks make a loan, and that's what, investors are looking at too. I mean,
how do I determine that though?
If somebody is inexperienced and maybe they put together their stuff in a way that makes you wonder if they really know what they're doing, and they're well, it's not only presentation, but it's because he does this really know what the heck they're doing. They've demonstrated before that they've done similar projects. Then is strong. Just what they're doing. Have this? Do they, to be able to carry this through too? And that's too.
Right. That's great. Thank you, Roger. There anything else to add on? Maybe something that you think you can share with my audience that I probably missed. Accent.
No, I mean, I covered a lot of good stuff here. So, your audience, they can chime in and ask you some questions. I'm open to answer some questions, to development.com. People can take a look at that, grab a copy of my book, get a few ideas from that. And then, I'm asking questions, get with somebody like Patrick and start them and get involved and start understanding some of these projects and markets. And that's the best way.
All right. How will someone be able to get a copy of your book, whether it's a soft copy or hard copy?
It is, hold on a second here. Okay. That's what it looks like. Don't Buy Multifamily, Build It. And it's on Amazon and on several other sellers. You might want the copy, but it's also on Kindle like that. Get it on the Apple Store also, but you want to get the print copy from Amazon. As you said, it's a pretty easy read. It only takes a day or two to read through it. I find a lot of people that I talk to who read it, they get into it and they buzz through it. They keep reading because they kind of get into the whole process, and then they in their mind they're walking through that process as they read it.
Do you have an audio of it at the moment?
I have not made an audio book of it. I recorded one before, but as you might imagine, a book like this does not have a wide audience. It's a certain amount of people that are into this thing. So it's time consuming and everything to record an audio book. I thought about doing it. I didn't do it. If I do a new edition of this in the future, maybe I'll do it then.
Okay. Are you on anything exciting you want to share with us?
I have been involved in high-end homes in some of the areas in Chicago, like Andersonville and Lincoln Square, where homes are $2 million and up. Brand new homes they sell before they're finished. I like that market. It's more affordable compared to Lincoln Park, where homes are $20 million and up. So. And very supply up in these markets. So I've been doing that a little bit the last couple of years. I've been involved in that.
Nice.
We had some family deals down in Lincoln Park and other areas.
So and audience a chance to see some of your work in the near future. You can maybe give a talk or two in the near future so that they can also relate to what we've talked about as the high end real estate properties and set. So
yeah, I'd love to
thank you
jump
much.
show you some more of that. I have some videos on YouTube that I've done on some of
Okay.
these books I was just talking about.
Right.
But grab the book. You can take a look at my website.
Okay.
And, I'd love to get in the future. We can show some more projects.
Great. And what is your YouTube handle, Roger? Or let's do it this way. Is it your full name on
Yeah, Roger. I'm
Okay.
trying to think. I've got a couple of them. It's at Roger Luri. I think that's it. I think it's just at Roger.
You know what? I'll look for it and I'll put it in the description.
URI. I'm pretty sure that's
Okay.
it.
Okay.
Like I say, I've got a couple of them, so I'm not pretty sure.
I understand. I understand. Thank you. Really, really, really appreciate this. We've been talking about real estate for of years now. So I'm glad we're able to do it. And you are always welcome to come back to share your knowledge and your experience with us. Thank you, Roger.
All right, great. Thanks for having me, sir. It was nice talking to you. I'll see you soon.
Likewise. Sure.